Today we're going to talk about a new strategy from the Trading Strategy Guides team, the Trend Breaker strategy. Don't miss it. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. As many of you may know, I'm most happy trading trends, but there's big money in trading trend reversals. Often you'll end up getting in early on a new trend. Today, we're going to look at a strategy for trading on a break of a trend. The trend breaker strategy uses three indicators. The MACD using a fast length of 12, which represents the previous 12 bars of the faster moving average, a slow length of 26, which represents the previous 26 bars of the slower moving average, and a signal smoothing of 9, which represents the previous 9 bars of the difference between the two moving averages, typically plotted in a histogram. Number 2, simple moving average. We're going to use an input of 8. And number 3, an exponential moving average with an input of 20. This trend breaker strategy also uses 3 different time frames: the 4-hour, the 1-hour, and the 15-minute. We'll use a top-down approach with these time frames to identify a trend, find a breakout point, determine an entry point, and execute the trade. The first thing you need to do is identify an uptrend or a downtrend using the 4-hour and 1-hour time frames. The reason both are used is that it will give you the best perspective in determining a trend. Draw a trend line on each time frame so that it touches 3 points of resistance or support. As you can see, on the 4-hour time frame, this is clearly in a downtrend. And here's a 1-hour chart. This is just to get another perspective of this downtrend. It's good to do this to completely confirm this trend by identifying 3 levels of resistance. Trading with trend lines is not easy. That's why it's important to have a clear system of step-by-step rules to make it easy for you to follow. In order to find a breakout point of the trend that was identified in step 1, the strategy will use a combination of the 3 indicators, the MACD, the SMA, and the EMA, to identify a breakout on the 15-minute time frame. As you can see in the 15-minute chart, the MACD lines were crossed. When the crossover of the fast and slow MACD lines occurs, this will signal that the trend was breaking. The moving average and exponential moving average lines also crossed. So when the MACD lines cross and the moving average lines cross, you want to wait until the candlesticks go above or below the trend line that was drawn in step 1. Then identify a point of entry into the trade. So in our example, the criteria was met to go to step 3 because the SMA and EMA crossed, the MACD lines crossed, and the trend went upwards and hit our trend line. This is a signal to move on to step 3. If neither of the indicators were to cross before the candlesticks closed and hit the trend line, then that would negate this trade setup. The indicators need to show that the trend broke before it touched the trend line. Remember, when our indicators are crossing, the trend needs to be heading toward the trend line that was drawn in step 1. This is because the trend is breaking and a breakout is about to occur. We'll identify an entry point when that breakout happens. Here's a list of the entry criteria. These 4 things must happen to enter a trade with this strategy. Number 1, the simple moving average must cross below the exponential moving average. Number 2, the MACD lines must cross. Number 3, the price must break below or above the trend line. And number 4, after the break of the trend line, you must wait for 3 candles to close on the 15-minute chart before taking your entry. Now all that's left is to identify a point of entry. Always use the 15-minute time frame to identify this point. So in our example, we can see that there is an obvious standoff between buyers and sellers on the trend line. Once there are 3 candlesticks above or below the trend line, you execute the trade. In this example, there are 3 candlesticks that fell above the trend line after our indicators signaled that the trend was broken. At this point, you want to make an entry, and once you've identified the entry point, you can place a stop loss. Place a stop loss past the last support or resistance levels in the trend itself. Again, use the 15-minute time frame to find this point of resistance or support. In the example, place the stop loss below the last support level. That way, if it pulls back, it will hit the last point of support and make a bullish move upwards. You can clearly see that there are two levels of support in the example. Use the support levels to determine the stop loss. The rule is to place the stop loss below the last support level, which is why you see the stop loss below these levels. The plan clearly identified a trend, a breakout point, point of entry, and determined a stop loss. The final step is to determine the exit point. This trend breaker strategy uses 1 risk to 3 reward ratio. What that means is that you have the potential to make 3 times more than you were risking. To do this, start by identifying how many pips there are from your entry point to your stop loss. So let's say, for example, you had 24 pips in between these positions. With a 1 to 3 risk to reward, we would simply multiply the stop pips by 3. This would give us a 72 pip target for that trade. As you can see in the example, the target was hit with a gain of 72 pips. The rules were followed, the ratio of 1 to 3 risk to reward was in place, and the trading strategy worked to perfection. The trend breaker strategy is simple and effective. There's no need to stress and worry that you made the wrong trade. You follow the rules and do not let anything else make you back out of a trade. If it follows the rules, execute the trade with confidence. Always remember to keep your risk no more than 2% of your account. This will help you identify daily trends and points where they break. Don't force yourself into a trade. If it does not follow your rules, search for another pair to trade. Remember, Tim's trading maxim number 2, there will always be another trade. And that's it for today's video. Come back for my videos on Monday, Wednesday, and Friday at 3 p.m. New York time. Don't forget to subscribe and hit the bell for notifications. Have a great weekend, and I'll see you with a couple of trade picks on Monday.